Hello and welcome to the short video highlighting Anglo American Platinum's performance for the first half of 2019. Safe production continues to underpin the way in which we do business, and we're pleased to announce that we've had no fatalities at managed operations in the first half of the year. We also continue to see improvements in the other key safety performance indicators and are reporting our lowest total recordable injury frequency rate, with a 6% decline from the 2018 performance. We continued our strong environmental performance, extending our track record of no major material environmental incidents since 2013. We're also extremely pleased to be ranked as the top environmental, social and governance performer globally against 55 of our peers in the precious metal sector by the highly regarded ESG ratings agency, Sustainalytics. The period saw benefits from a stronger PGM basket price, and despite a few operational headwinds, including electricity disruptions and an unprotected strike at Mototolo mine, we achieved a relatively steady operational performance across the portfolio. Some of the key highlights include a rand basket price that increased by 33%, buoyed by a record high palladium price and a weaker rand. We had total refined PGM production, including our own and tolled production, increasing by 6% to nearly 2.3 million ounces. The restructuring of the portfolio over the past few years is paying off, with 70% of our production now in the first half of the cost curve. We had quality earnings, with EBITDA up 82% to 12.4 billion rand. This helped to nearly double our return on capital employed to 45%. We've got a strong balance sheet, net cash position of 6 billion rand, and that was up from 2.9 billion rand at the start of the year. Our strong performance allows us to maintain our position as the PGM industry leader based on shareholder returns, declaring an interim dividend of 11 rand per share or 3 billion rand for the first half of 2019. I mentioned that the strong results were due to a combination of a relatively steady operational performance and an improved basket price. So looking at the operational performance in a bit more detail. Operational challenges, including power disruptions, the strike at Mototolo, and safety stoppages at the non-Amplats managed Madikwe joint venture, saw total PGM mine production down 2% to 2.14 million ounces. We had record production from the Unki mine, up 3% at 95,800 ounces. I've already mentioned the 6% increase in total refined PGM production as a result of performance issues in the first half of 2018 and the improved operational performance in the converter plant and overall better processing stability across other plants in the first half of 2019. As per normal practices, the annual stock count was completed in the first half, including the precious metal refinery, which occurs every 3 years. This resulted in a net stock count gain, mainly positively impacting platinum and palladium. As a result of some PGM rollover from 2018 and the additional metal from the stock count gain, PGM refined production for 2019 is expected to be higher than the metal in concentrate production. Now let's look at how the PGM basket price contributed to the strong results. The basket price in dollar terms was up 16%. The rand weakened by 15%, leading to a 33% increase in the rand basket price per platinum ounce sold to 38,300 rand. We achieved an average dollar platinum price of $831 in the first half. That was down 11% year on year. The palladium price, though, climbed 39% to $1,400 per ounce. Rhodium was up 47% to $2,840 year on year, with strong automotive demand expected to support higher prices for palladium and rhodium going forward. The combination of the increase in PGM sold and the higher basket price resulted in strong financial performance with EBITDA up 82%, headline earnings per share up 120% to 28.15 Rand a share, and a net cash position of 6 billion Rand, enabling an interim dividend of 11 Rand a share, or 3 billion Rand, to be declared for the first half of 2019. These results continue to demonstrate the stronger position Anglo American Platinum is in today due to the tough actions we've taken in recent years. And I'm pleased to say that we see even more value that we can unlock ahead of us. Our strategy remains in place, and we continue to focus on driving the value and earnings of the business by taking operational performance to world best practice levels, investing in growth optionality across the portfolio, and developing the market for PGMs. Looking ahead for the rest of the year, we expect the three major PGMs to be in a combined deficit, with platinum likely to be in balance or even a small deficit in 2019, following the record investment inflows into exchange-traded funds seen in the first quarter. PGM production guidance, that's metal in concentrate, remains at 4.2 to 4.5 million PGM ounces. That excludes toll-treated material. PGM refined production at 4.6 to 4.9 million ounces will be above the metal in concentrate production, while sales volumes will be in line with the refined production, as the backlog of work-in-progress inventory build-up will be largely refined by the end of the year. Our capital guidance remains unchanged at between 5.7 to 6.3 billion rands, and unit cost is also expected to remain in line with the previous market guidance of 21,000 to 22,000 Rand per platinum ounce produced, with potential headwinds relating to Eskom and the wage negotiations. I would like to take this opportunity to thank and acknowledge the contribution by our employees and our stakeholders for their contributions during the first half of the year. Thank you very much for listening to this video.